world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by serial entrepreneur Michael Kent. Michael is the founder and CEO of Azimo, one of Europe's most successful fintechs of recent years. Michael is also co-founder and non-exec director of Tandem, a new digital-only bank in the UK. Previously, Michael co-founded Small World Financial Services, a money transmission provider, which he grew to $4.5 billion in annual transaction volumes. Michael is also a startup investor and advisor, working with companies including Curve, a smarter credit card, and Comply Advantage, a digital KYC and compliance solution. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. Thank you very much for joining us today. Please welcome Michael Kent. Michael, welcome to Rebank.
Hi, thanks very much.
How did you become an entrepreneur?
Okay, so back in the midst of time, I'm slightly older than most of these fintech entrepreneurs that you've been talking to. I was at INSEAD, it's a business school, and I did a course called Realizing Entrepreneurial Potential. You go out and you look at different business opportunities with the idea of transacting something. We looked at a bunch of things, myself, my business partner, Ricky Knox, and we found a business that we quite liked. We ended up not doing it, but it kind of really gave me a zeal for doing my own thing. So after INSEAD, I worked for a couple of companies. I worked for WPP and News Corp, spending other people's money and trying to make things happen. And then in 2005, Ricky and myself decided to go it on our own. And one of the sectors that we thought was particularly interesting was financial services. We saw a lot of people making a lot of money, and potentially we didn't think they were as smart as they could be. We didn't think they deserved those returns. So we thought one of the areas that was going to be really interesting was consumer finance and its intersection with technology. And we started up a business investing in those kind of opportunities. So I guess it was, 2005, but it was really sparked from a course I did at the business school.
Mm-hmm. You said your business partner, Ricky Knox, I know you and he have done a number of things together since the INSEAD experience. Did you know him before, or is that where you guys connected?
No, so on the first day of the term at INSEAD, I sat next to two people. I sat next to a rather annoying American guy with a loud voice, who was Ricky, who ended up being my business partner. And more importantly, I sat next to a very beautiful English girl called Sophie, who is now my wife, and we have two kids together. So I didn't know anyone when I went to INSEAD. I came out on top, though. I think it was a pretty important experience.
Very positive words for those grappling with the business school decision. You've been in fintech since before it was fintech, 2005, you said. Tell us a bit about Small World, that company that you and Ricky first founded, and how you and your co-founders originally identified that opportunity.
We were looking for something to do in consumer financial services, because that was kind of the sector that we decided to look at. If you're a management consultant, and Ricky's ex-LEK and I was ex-Arthur D. Little, the money transfer market looks pretty interesting. So it's growing, it's going up and to the right. It's highly fragmented. Even the biggest players, people like Western Union, have a pretty small market share, sub 20%. And it's just an interesting space because the people and the quality of the businesses out there are potentially not what they are in other areas of finance. So we looked at the market, we saw it was highly fragmented, and decided to do a roll-up. So we raised a bunch of money over a number of years, and I think we transacted 12 businesses over 5 years, put them all on a common IT platform, took a bunch of synergies in terms of their partner relationships, the cost base and technology, and then turned a small business into a big business. And it was great fun, very hard work. Buying businesses at that kind of pace and with complex financial structures is hard going, but it was a great entry point into the intersection of technology and finance, and a really interesting way to work how consumers actually think about money. And it's potentially more interesting than you might think.
So it sounds like an M&A play to start with, and there was clearly a technology component. did you guys experience kind of range across both of those areas, or did you engage with support to strengthen the team?
No, I mean, we were pretty scrappy. So we were reconstituting financials from bank statements, and we were, doing most of the technical, commercial, and financial DD ourselves. We tended to leave the legal stuff to the experts. But so technology was a big part of it, because putting stuff on a common platform gives you an ability to look across different business units and get really good data and start making better decisions on it. It was pretty leading edge for its time, although more than 10 years later, that I shudder to think how long it took us to emerge with decent numbers and decent data. We get instant balance sheets and instant views on our customer base now, but back then it took a long time, and there was a lot of heavy lifting involved. Mm-hmm. But yeah, we worked across everything: finance, technology, commercial ops, and the actual just the running, the people side of the business, which was tough, particularly in traditional money transfer, where you have thousands of dispersed people who are using the system, all the agents, all the company owned stores, head office, local offices, and in the end, Small World right now is active in, I think, all 5 continents. So it's a big operation.
So I guess just for a bit of terminology and kind of industry, high level explanation for those who may not be familiar with it. When we talk about money transmission, it's everything from Western Union to corner shops, basically individuals sending money abroad generally.
We characterize the world, for better or for worse, into 2 segments. There are the FX brokers, and those are, I guess, anyone from your traditional bank to a company called Travelex or MoneyGram or people like TransferWise or World First. And they tend to do large value transactions, turning them into another currency. And they will do that mostly for corporates, because they do more in terms of FX, and they'll send it generally to developed parts of the world. So north remittances is the standard industry parlance. And then you have remittance players, and those guys, traditionally people like Western Union, MoneyGram, it's an interesting story at the moment, Euronet, RIA, Small World on the traditional side, and then people like, I guess, Azimo, Remitly, World Remit, and Zoom on the digital side. And those guys, we're really focused on helping consumers, individual consumers, normally economic migrants, sending much smaller amounts of money, and they're generally going to emerging markets. So the actual average transaction size is significantly lower. The place where it's going is more far flung, and the methods that we use to disperse the cash on the far end are not just bank accounts as it is for the FX brokers. It's bank accounts, it's cash payout, mobile wallets are becoming bigger and bigger, things like M-Pesa. We top up mobile phones, we offer home delivery in certain markets. So it's a broader set of services, and it's for a different audience group.
Did you make any mistakes in building or scaling Small World? Did you take any lessons away from that experience that have benefited you since?
I mean, we made pretty much every mistake in the book, so I don't know where you want to start. But no, we took too much dilution on the first round. We were significantly capital constrained nearly straight out of business school. So that was a very expensive first set of cash that we raised, but we're very grateful to those guys, and I'm lucky enough to call them investors in this latest venture as well. So that was expensive. I think financial services and technology takes a lot longer than you think. So I think particularly the scaling speed of things is a bit slower. I think the technology takes longer to build. I think you have to be 100% on top of your regulatory responsibilities, and we didn't transact a number of companies and got them all the way down the road, and then decided not to buy them on the basis of regulatory questions, and that was no doubt the right thing to do. But I think we would have come to that a lot faster these days. We're much more on top of that piece of work, and yeah, I think there's a whole bunch of things, but I don't regret them. I think each one was a lesson. Small World's still doing very well now, and I think we got away with it.
How easy or difficult was it to get to grips with the regulated nature of the money transmission business as you guys were getting into it?
One of the areas we did defer to external expertise was on the regulatory and legal side. Although I would counsel anyone who's thinking about getting into fintech or is in fintech never to not understand this stuff personally. So, the FCA are very good, and most of the other regulators in Europe are very good about publishing guidelines on how they approach things, how they want to see you communicating, behaving in your business, approaching risk. And it's utterly critical that senior management just really understand that stuff. You can't just rely on a lawyer to come in once a year and train you or talk at you in relation to that stuff. So it's changed a lot. The regulatory hurdles in 2005 when we were setting up are significant. I mean, in fact, it's night and day where they are now, 12 years later. So things like the PSD hadn't come in, you needed local regulatory approval in each market. It wasn't regulated by the FCA or the FSA as it was then. It was still by HMRC in the UK, Her Majesty's Customs. So, big differences in what was required on a regulatory basis. It was tough to get to grips with, but the regulators want you to do well. Generally, these are consumer protection / consumer choice agencies. They're there to protect customers and make sure there's a good range of services available to them. If you are open, honest, transparent and approachable with them, I've always found that they're very much, that kind of behavior is reciprocated. So again, communicating with regulators through lawyers and getting third parties to do it is not always the best idea. I guess it's tough, and it's, you have to buckle down and put your head down and get on with it. But yeah, if you actually take the time to understand some of this stuff and engage, you can have a pretty successful outcome. I think the big thing about regulation is it puts off entrepreneurs, which is a real shame, because we need more entrepreneurs in this sector. If more people took the time to study it, they'd find out it's not maybe as difficult as they thought.
You eventually left Small World. Was that via an exit?
We took a partial exit. We got some money off the table, and then we did a final deal. We bought a company in the United States, a company called Choice Money Transfer. I think it's one of the top 5 players in the US. And then at that point, there wasn't really anything else to buy. So a guy called Nick Day, I was also at INSEAD with, has taken the business forward, runs it now. I still own a small minority stake in that business, and I hope it does well.
And I believe after that you did some investment work, which I think maybe we can get into a bit later. But if one money transmission business wasn't enough, you eventually came back to the sector with Azimo, your current venture. What was it that drew you back to the money transmission business?
So it became very apparent to me that consumer interaction with technology and the way that people were handling their money, or no, actually their technology was changing, but the way they were handling their money hadn't really kept up. So when we first started our business, Small World, we had people who would walk into a corner shop, hand over a bunch of cash, and then pay maybe, I don't know, £1, £2 to use a telephone in the corner and to phone up their beneficiary and tell them the money was on the way. By 2010, that was completely changed. People were communicating on Skype or Hangouts or chat or SMS. And it was quite clear that the oldest fashioned and most backwards part of that process was the handing over of cash and filling out a piece of paper in a store. And it was that part that made it expensive. It was that part that made it liable to a few problems. And, the problems ranged everything from the money going missing, and in cash businesses, shrinkage, as they call it, or theft, as is probably more accurately termed, is always a problem. The ability to track the transaction on a paper-based system is harder, and the ability to tell the person on the far end, because remittances are a flow of both funds and of money, was much more difficult. So, you put it into a digital environment, it's faster, it's more transparent, there's less people in the value chain, so it's cheaper, and it just kind of makes sense. Now, the big reason that people haven't done that previously was because the kind of customers that we have a tendency to get, which are the economic migrants, aren't doing, jobs. Some of them are, but not all of them aren't doing jobs in front of a PC. These guys all have mobile phones now, so they can all use a digital service, and that was the reason behind Azimo. We just wanted to, we saw there had to be a better way. And you'll see, we've been sitting in our waiting room for a few minutes before you came here. There's a big sign that says "better" on the wall. The genesis of Azimo is all about being better, a better way to transfer money using technology to really affect that change.
So it almost sounds like Small World was a play on operational process and kind of cost efficiency enhancement, and Azimo is a bit more a play on that kind of last mile user experience around money transmission.
Yeah, I mean, we did some pretty interesting stuff at Small World as well. So we had the largest direct business, which was a call center. We allowed people to send money, depositing it into bank accounts, and then phoning us up and passing and pushing that money on. So we had some pretty interesting ways of dealing with customer service, pretty interesting ways of trying to track the customer, because we had a much more direct relationship with them than somebody like Western Union or MoneyGram would. And so we were tracking lifetime value, customer service, NPS, and those kinds of metrics, and we took that all forward to Azimo. But yeah, I think the Azimo is a tech company. That's probably the biggest difference. It's a technology company that happens to be focused on an area of finance, which is remittances. I don't think anywhere I've worked previously has had that kind of tech focus.
Broadly speaking, how many customers does Azimo have?
So we've got well over 1 million people registered on the platform now, on the send and receive end.
And how do customers typically use Azimo? I think you mentioned that a large proportion of the users aren't necessarily doing office-based jobs or desk-based jobs.
Well, so the majority of our customers, I mean, and we try not to generalize. Our customers are everyone from investment bankers to, people working in hospitals. It's everyone. There's no typical Azimo customer. They're sending to, I think last month we sent to 135 countries all over the world. All types of amounts, all types of people. So it's a very universal service. But most of our customers use a mobile phone. Predominantly they will use an Android phone, although we have quite a few iPhone customers as well. They will generally send a smaller amount of cash, so some $500 US is probably the average transaction value, and they'll send pretty frequently. So a standard customer will be sending once a month. They'll be sending it just after they get paid. So the last Friday of the month is a big day for us, and that weekend tends to be big as well. And they will be sending it 85% of the time or more for family support. So they'll be sending it to an immediate family member who will be using that money for, important stuff. Things like groceries, things like educational bills, things like healthcare. These are bottom of the hierarchy of needs requirements. And so it's important. And what you actually see, if you look at the data, even in 2008, when that kind of consumer segment was pretty hard hit by the recession, as we all were, but them in particular, the transaction values went down a bit. People sent less money. Money was tighter, but they kept sending. Absolutely, they kept sending. So whilst other money flowing into emerging markets, things like foreign direct investment or aid, really dried up in that period, remittances was the number one thing that just kept on pumping through. So this is really important money, and we try not to forget that when we're going about our daily business at Azimo.
How have you connected with your users to date?
All sorts of ways. The great thing about putting people into a digital environment is you can really see and understand that in much more detail how they're interacting with the product, how they're talking about it, how they're discussing it on social, how they're sharing it. We've always been a data-driven company. So understanding that, having the right metrics is super important. But we know that's not everything. So we have qualitative research that we do on a very regular basis, customers coming in, talking about Azimo, what they like, what they don't like, getting them really involved in the product innovation cycle. We also do quite a lot of stuff in market. So we work heavily with our partners on the far end to understand exactly what services people want so that we can build those. And then we have occasional events for, all our customers to say thank you. They tend to be community focused. So we do something with the Filipino community in Germany or the Nigerian community here in London. And, they're a lot of fun. It's kind of about connecting with people and reminding them that you're kind of on their side. When we started the business, we always talked about sitting on the same side of the table as our customers. I think there's a feeling that the sort of more traditional guys, Western Union or MoneyGram, they have a very transactional across the table kind of relationship in terms of our tone of voice, the way we talk to people, the way that we communicate. We're trying to be much more an assistant and a helpful partner rather than a more staid traditional financial institution.
You mentioned partners just then, and I was interested to see that you guys integrated recently with Facebook Messenger. I believe you were one of the first payments companies to do that here in Europe. Can you talk a bit about the importance of partnerships for you guys, both in terms of
the first company globally? Actually, we did our first Facebook Messenger integration in 2013, which we announced at Finovate that year, which was big news at the time. So how time flies. Remittances are a flow of two things, a flow of money and a flow of information. You need to send the money to where it needs to get to so somebody can pick it up, and the person who's picking it up needs to know that it's coming so they can do so. The money bit is not easy, but it's doable. The information bit is often what's hard. And Facebook Messenger as a platform with 1.6 billion, unique users a month is often the best way these days to communicate between sender and beneficiary. So, we use it as a channel, a communication channel. We think it's important. We also use it as a way of communicating with our customers, so people can get customer support or they can check rates with a chat bot on Facebook. But it's just one of another way of communicating and connecting people, because really when you're in the consumer cross-border payment side, you have to think about both the money and the information flow.
So effectively leveraging the tools that users are already kind of accessing to manage other elements of their lives and being present where they are.
Yeah, absolutely. And it's not just Facebook Messenger. In certain parts of the world, people are using Viber, or they're using WeChat, or they're using, different messenger platforms. And we're looking at all of those guys to see how we can really enhance the service for the customers, because, as I'm sure probably most of the people you get onto your podcast would agree, if you're building really great, easy to use products for customers, that's how you're going to be successful. Mm-hmm. And that's kind of where fintech gets its edge. There's a lot of other people out there with a lot more money to spend, but if you can really focus on customer need and be agile and quick, then you have a decent chance of being successful.
Mm-hmm. I think that integration component is absolutely key, and I think it makes a lot of sense in your business. I think it's certainly one of the kind of the biggest headlines around fintech at this point. It's all about integration. It's all about marketplace. It's all about open APIs. I think that businesses should think carefully about when those types of relationships can leverage what they're already doing and make what they're doing better, and in which situations companies are perhaps trying to force something that isn't a natural fit.
It's all about the debate is always, is that core, is that non-core? Where are you building value, something unique that you really want to own and be able to build on yourself, or where can you best leverage relationship or something that exists already? So we're integration experts. We partner with hundreds of financial institutions all over the world. They're not necessarily easy integrations. I wish that all banks had standardized APIs. Unfortunately, that world doesn't exist yet, and I suspect it won't for a long time. So, we've done a lot of heavy lifting on those integrations. We integrate with a number of people on the compliance side, both data providers and people who provide the lists of the people you don't want to send money to. And then on the payment side, obviously, to get the money in, we use a bunch of different methods, and that's some fairly hefty integration work that happens there. So if you see a diagram, if you look at my CTO and he shows you a diagram how the stack works, there's arrows going out all over the place.
Facebook was granted a payments license in Ireland in late 2016. They operate a payment service in the US already. Based on your experience in the payment space, does this seem like a natural area for Facebook to play in?
I can't speak for Facebook, and I'm not entirely sure what their strategy is. I can surmise that I think if you want to get your next couple of billion customers, they're not going to come from developed markets, they're going to come from emerging markets. And if you look to offer them something that makes you inescapable, indispensable, it's unlikely to be the kind of products and services that Facebook initially offered in developed markets. We all got onto Facebook because we were at college and we wanted to keep up with our buddies. That is a reasonably high order hierarchical need. I think if you want to get people in emerging markets, you've got to be into communication, so things like Messenger, WhatsApp. You've got to be into financial services, and I would suspect you probably have to be into either transportation or healthcare or other verticals like that. That's where the real need in emerging markets sits, or communication. Facebook putting up and Google for putting up satellites and airplanes that will connect users. And if you want to be successful in those places, I think your product suite will have to be adapted. And I think financial services is an interesting place to start.
In addition to your work at Azimo, you also invest in and advise startups. If I'm not mistaken, you started investing after exiting Small World. What drove you to become a startup investor?
Well, Ricky and I had actually done a few things along the way where we took whatever we kind of made at Small World and just tried to find the next opportunity. And it was always in consumer financial services, pretty much, and associated industries. And we just really enjoyed it. It's a massive buzz working with management teams who are solving hard problems in consumer finance. And as you've been in it for longer and longer, sometimes you have some useful thoughts or some useful connections to share with those entrepreneurs. But yeah, why did I get into it? Because I'm super excited about the intersection of technology and finance, and what else would I do with the money other than invest it in interesting businesses? So yeah, I get a real buzz. In fact, I probably get more out of it than the companies I invest in, I'm sure. But yeah, it's exciting stuff.
How did you build deal flow initially when you first started looking to invest?
Basically, people come to us. It's people we meet in the course of going out there and trying to build a business. So you entrepreneurs, particularly in financial services, are quite good at talking to each other, swapping tips, trying to stay ahead of the game and each other. And it's quite close-knit community. It's not huge, even though the attention that fintechs have been getting is sort of a bit crazy these days. It's not a huge community of people. And I guess we've tried to be, in the businesses that we're involved in, as useful as we possibly can.
Are you still actively investing?
Yeah, no, absolutely. I'm looking at something at the moment, actually. Yeah, no, definitely. It's not a well managed piece. We have a vehicle, Hexagon Partners, that we invest through, but it's really just stuff that we think is interesting. In fact, it's not. It's people that we think are interesting.
Actually, that was going to be my next question. What is it specifically that you're looking for in investment opportunities?
Incredibly resilient and get shit done entrepreneurs who have a lust for changing stuff. Particularly if you're investing early stage, super early stage, seed and pre-series A, it's all about the team. It's a little bit about the opportunity and how they think about it, but it's really, how they think about it. So it's about how the team thinks, who the personality is, do they have resilience? I know more than most that it's not a linear ride up to the top or even up to the middle in financial services in particular. So, I just look for people who will deal with adversity, be able to come through it and really want to kick ass in their sector. And I think that's the most important thing.
Can you tell us a bit about the Curve and Comply Advantage investments? Do those reflect a broader bullishness on retail payments and quote unquote reg tech?
Sure. I mean, Curve is one of a number of card-based plays that look to offer people a better way of managing their financial lives through in Curve's case, single payment card. So aggregating that spend and getting better value for money on things like foreign exchange transactions, things like transactions with particular retailers where you can get cash back. It's beautifully packaged, and it's exciting to see how far that product has come in a very short space of time. I'm blown away by just how beautiful it is. RegTech is interesting because regulatory compliance actually in the larger financial institutions and increasingly in the fintechs, perhaps because I'm an old man of fintech, I'm a bit more focused on the compliance side than some of the other guys have been, particularly early stage. But, more and more people are understanding that great regulatory compliance is a hygiene factor. In fact, it's an existential risk if you don't get it right. So business called Comply Advantage uses big data and AI techniques to look across very broad data sets and look for compliance anomalies, and does things like PEPs and sanctions scanning, which is making sure that the money that you're taking isn't from any bad people, bad hombres, as maybe Donald would say. And it's doing that for very large clients at scale, huge numbers of transactions screened per minute, and it's doing it with a phenomenal uptime at a much lower cost than some of the traditional guys would do. I think if you think about the next wave of smart software that's coming across, AI and machine learning enabled, I think the very obvious early place to apply it is compliance and AML, anti-money laundering. And Comply Advantage, Charlie is an incredibly smart entrepreneur, and if anyone's going to actually make a monster success of this, it'll be him.
What advice would you have for fintech entrepreneurs? If you were to start another company now, what would you do the same or differently compared to Small World or Azimo?
So I actually regret I got started late in my career. So I'd done my MBA, and it was a couple of years afterwards that I started doing this. I think that's changing. I mean, I think the acceptance of being an entrepreneur and getting your entrepreneurial chops early is changing. And I think there's a lot more jobs in startups these days. So the advice I'd give is just get on with it. Don't let the regulatory requirements scare you off. Don't not do the work, but understand that if you can build a good business in a regulated sector, then you've got a moat that is pretty valuable. And then the other thing I'd say is go out and ask for advice. There are lots of people who have done this stuff. Everyone has a viewpoint. You don't have to take it on board, but there's an ecosystem of supportive entrepreneurs in this sector, and they can be supported with advice. They can be supported with money. They can be supportive in terms of introductions and how to do things. Don't always trust what they say, and don't always do what they say. But that's a nice thing about this sector in the UK.
Potentially related question: to what do you personally ascribe your entrepreneurial success?
Wow. So yeah, like most entrepreneurs, I'm not entirely sure how successful I am, but it's been quite a ride. It's a good question. I think it's just resilience, and that's what I look for in every company that I potentially invest in. Every entrepreneur I potentially invest in is getting shit done, and when it's hard. Somebody said to me last week that running a fintech business was like getting punched in the face 100 times a day, and then occasionally somebody would give you a cocktail that you could drink before getting punched in the face again. I thought, in many ways, that's a good analogy. Yeah, I think you just gotta keep at it. And if you keep at it, you will be successful.
Michael, what's the best way for people to find out more about your work and connect with you directly?
The work is, the baby is Azimo, which is www.azimo.com, and my contact details are on that site. So happy to reach out to people. I'm on Twitter, Instagram, everything else. Yeah, happy to chat.
Michael Kent, thank you very much for joining us today.
Appreciate it. It's good fun. Cheers.
Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.